things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
Take away the weekly.
Trace back down to what we've got evidence that price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone. What the kangaroo tell?
Always recommend trading on the 5 minutes.
Some of these exotic pairs and pretty steady uptrend, making these higher highs and higher.
Mostly trend following.
The stimulus in a certain way.
Hello everybody, hope you're well. Sorry I'm a wee bit late. I was stuck in some standstill traffic, so I was rushing back to get here on time, but I was just a little bit late. So hope everyone's well. Welcome to the US scan with A1 Trading. Who's in the room? Dawn, how you doing? Pivot trading expert, watermelon sugar high. Not sure what that means, mate. Hope everybody's well. If you're in the room, come and say hello. Let's get straight into it. I'll go into the SPX first. I've not actually looked at the markets over the past few hours. I've been doing something, but let's have a look at them now. SPX today. Now, I actually thought from this hammer bar here that we may get some bullish pressure coming into the SPX. So it seems to be that that has not come into fruition. The reason why I said that was we came from this impulse to the downside. This was a nice, my favorite ABC corrective, ABC here, roughly around that 20. This looked nice for continuation to the downside. However, we had the impulse break of these lows, but this price action for me is a little bit more bullish. Yeah, I'll do gold here. I'll do gold. Let me just go through my watch list first. It's a little bit more bullish than you would expect to see for a corrective for continuation to the downside. So that's the reason why I was thinking possibly, okay, intraday push, corrective, continuation to the upside. I just had a slight feeling, but maybe that is not going to come to fruition. So what I would think and what I would say that even though we are technically on a downtrend, right, we still are on a technical downtrend. If we get a breaking close now below this wick area on this 4-hour chart, remember, a breaking close doesn't mean a break, but when this 4-hour candle closes, we could possibly expect negativity now. Even though I did think in the morning, okay, it looks not too bad for potential movement to the upside. Maybe this is, again, on US Open, a little bit of bearish action. Maybe we're continuing to the downside, even though we are, we're all on a trend to the downside. So continuation with that trend maybe makes sense, but I would wait for that candle closure, for that 4-hour closure to really confirm that. Interesting that the SPX has been falling a couple of days now. I wonder what that means for risk on versus risk off. So during this section here, we obviously had a decent move in the commodity currencies, the yen weakening off, right? But the reason why I say wait for this closure is we've seen quite a lot on the US Open, a decent move to the downside that is sometimes rejected back up. So that's why I'm always going to say wait for that 4-hour closure, because I do think it is important. But if we bring up, the FinViz here, the currency strength meter, I wonder what it is saying this afternoon. So here, you can see that the yen is weak, the US dollar is weak. We've got the pound, the Swiss, New Zealand CAD a bit more stronger. So that would indicate potential a bit more risk on than risk off, because you've got the USD and the yen weak. However, the SPX is telling us something different. So we had this last week where the SPX looked bearish. I think it was at this section here. Right? We were breaking through, but we're still getting a bit of strength in that Aussie against the yen, a little bit of weakening off, and then the yen did start to strengthen in a little bit. So I would be a little bit cautious right now. Remember, it is a Monday, and sometimes the move on Monday, not many fundamental drivers. It's just I just don't like it. I'll be honest with you. I just don't really like it now. If we had a push through from this section, I would have liked it a little bit better. This is still on the cards. A potential head and shoulders here, neckline, break to retest to continuation to the upside. But if we get a break and close, I would be inclined to go more risk off than risk on, personally. The markets aren't very nice. You know, this is not a pullback that you want to see. It's a bit more like a V reversal, basing structure, decent pullback, but it's falling off a little bit now on account of possibly those sellers coming in because it's on that trend to the downside. So yeah, I would say a break and close looks decent for continuation to the downside. The dollar is at an interesting position. So the dollar here, even though this price action is quite bearish, we're at a big level, roughly around that 50% from this movement to the upside. But there's no doubt now, because of this last 4-hour bar, it's a little bit precarious. I originally thought, okay, if we get a closure here at the 50% level, buyers coming in, you think about possible trend continuation. Now, the reason why it's shifted, like I said, is because of these two bars. So in terms of a pullback, this is not really what you want to see. So again, the dollar is a little bit precarious. If it does want to act as that risk-off asset, you expect a little bit of a push if the SPX does fall. But the chart is not telling us that right at the moment. I would look possibly on lower time frames. I mean, you can just see this bearish action now. I would look on lower time frames for an inclination that the dollar wants to move to the upside, and this support wants to be respected. This 50% wants to be respected. But if it doesn't, you could see this dollar fall off a little bit. You've got that 61.8 line in the sand. Wait for this 4-hour closure. Make your decision then on continuation or a fall off slightly in this dollar. Now, I'm not saying if this breaks through, this is really bad for the dollar. But what we could be in for is maybe a complex corrective from this move to the upside, right? Because this price action in terms of a retest, if you're looking at a retest of this area, let's say on the daily, doesn't look great. It does look quite bullish, and certainly it's changed its sentiment from this morning. So I would say my bias, using possibly my experience, now this could bite me in the bum, but wait for that 4-hour closure. If you get a catalyst and a reason to say, okay, this pullback is over, then it might not be a bad idea or a bad trade to look for potential dollar setups, but just wait for that catalyst. Okay, I'm going to watch this today. So as I said, this afternoon is one of the first ones in the market that I've not really looked. So I'm going to go through them now and see what we've got. Aussie yen was the first one. Aussie yen. Now, this is a nice trade. Irrespective of what it's doing now, I'm not in it, but I'm going to show you why I like it. So we talked about this context, I believe, possibly last week. I can't really remember. Big V reversal, nice complex corrective. You had your catalyst here on this 200, on a little bit of volume, that this maybe, even though the SPX was falling, wanted to move to the upside. Now, when I talk about breakouts, I talk about B wave quite a lot. So breaks of B wave. And that's what I was looking at potentially. I wasn't in this trade, but that was what I was looking at potentially on this Aussie yen. So we had our V reversal. We pushed through, so which immediately means for me, I can't take that break, because I don't take breaks that come from deep that go like this, because you could be susceptible to what's potentially happening now. You know, you got breakout traders possibly entering in there. For me, the context, although it's nice from a longer term perspective, the context isn't massively great. Okay, even on this decent smaller push, you're breaking a key level, and we want to break it healthily. So I would have needed a little reload for that to move to the upside. Now, another thing is, one of the things I don't do is take breakouts on these smaller time frames. And one of the reasons is this, what's happening right now. So the context here was great. V reversal, nice period of accumulation. See that rising pressure. You got a head and shoulders here after that V reversal. Everything there was good, right? Pull back to the 20, a few bars, push through. Right, the inclination there was a slightly lower volume push, which we don't want to see. We want to see a slightly higher volume push. But I didn't take the breakout. I was looking for a breakout retest, and we didn't get it. So this could potentially be a trade, which is good that I didn't take. So remember, sometimes a position is to not have a position on at all, because we're getting this decent move to the downside on Aussie yen. So this for me is I kind of like seeing this, because when I do, it puts a little bit more concrete into the fact of why I don't take those breakouts on smaller time frames, purely because you can get caught in things like this on fake outs, etc. And also why I don't take breakouts when we have price action moving into it quite cleanly. We want another reload. We want a little bit of mess before we take that break, because this is what happens. So we have to be very careful on taking these breaks. Sometimes if you see it and you don't get caught in FOMO of buying the Aussie yen here and get annoyed with yourself because you come back down. So it's important that we stick to our strategy and make sure we're not making silly trades, because silly trades will add up at the end of the year. Make no mistake about it. You take 1 or 2 silly trades a month, that will add up massively. If you're risking 2% or 1.5%, make a couple of mistakes. I'm not saying you can't make any mistakes. Right. Obviously, you're going to make mistakes, but we're trying to reduce them every single month. And not taking trades like this could move up to the upside, but not taking trades like this is a good way to go about doing that if you are a breakout trader or like how I trade. So Aussie yen, in terms of potential trades, I would have to be looking at this zone here. So this context is still good. Okay, just because I can't take the breakout here doesn't mean that we get a setup up at the top here for a potential breakout to the upside, because this is still nice. Okay, and if we fall off, then we fall off. Fair enough. We don't take the trade. Aussie yen, pound New Zealand. Pound New Zealand is another one that has just gone, but maybe this will give you a good indication of what I'm looking for. Big V reversal, smaller V reversal, smaller V reversal, squeezing into that level. So for me, I was looking at a breakout to the downside, retest to go short. But obviously, getting some bullish action right now, and the New Zealand coming off a little bit, pound relatively strong, and that setup has indeed gone. So again, a setup that I didn't take. And this is the thing. This is what I normally do on a day-to-day basis. I have all these ideas. You know, there's 8 pairs on my watch list today, and I've not got a trade. And that happens quite a lot. But I'm not in bad trades. You know, I'm not losing money. Capital protection is the name of the game. But another reason why I liked it is because of this. So we're pulling to the downside. And at the moment, before what's happening now, it looked to be, because of this wicks to the upside here, potentially we were continuing down. And if we had broken underneath that area, so underneath this area here, we'd have been underneath these moving averages on the daily, which again would have been a good indication of possible trend continuation. But that is obviously off the cards now, and we move on to the next one. New Zealand yen, again, New Zealand yen is another one that looked good. Great context here, complex corrective, AB, shallow C, push on to this area, tag that resistance area again, pull back to this simple 20. Morning star pattern here on that simple 20 and a push through. The better thing is we had a push on volume, was looking for a retest of that area to go long. This actually would have been a trade you probably might have got something out of if you did take a breakout, certainly around 1-to-1, potentially 1-to-1R or trailing. However, this is what I like to see here. So see this just prior to the break. Tag of that area. I like to see multiple tags of the area. For me and how I look at markets, the gold's flying. Okay, I'll do gold in a sec. I'll do gold right after this then, guys, since gold we seem to be going. Probably because the dollar's weakening off, right? Stocks are falling, safe haven asset, inflation hedge, etc. But in terms of a breakout, this is exactly what we want to see. A nice little reload back to that 20. We've got our possible catalyst there that this wanted to rise in terms of that morning star push through. And not only that, because this one was technically counter trend, was you can see our context here on the 4-hour. So for counter trend trades, you need something to get you in. And for me, similar to what we had here, head and shoulders, and it pushed through. So again, we didn't know this was going to happen. But if we take this away, the context there for a counter trend trade was there because we've got that head and shoulders on the 4-hour. Anyway, we're obviously getting a strengthening in the yen right now. So that is another one that is off the list. Gold's flying. Okay, let's have a look at gold. Gold. Yeah, I mean, look, there's your power of your possible naked setup, right? Double bottom, you could call it double bottom. I'll just take this off so it's a little bit cleaner. There you go. But your big bearish engulfer on your support zone. Possibly, yeah. I mean, I wouldn't say it's flying. Gold is flying. I wouldn't say gold is flying. I mean, I had a decent move up here. But again, we take the larger context of things. We could be breaking out of this structure. Could be breaking out here. A breaking close above this level would be pretty key for me. Again, you look at this, head and shoulders there. Breakout structure, breaking close above this area. May look good for gold to the upside. Certainly if dollar decides to push up. However, until that happens, so until we get that 4-hour close, I would wait for that confirmation. We don't want to see gold just go like this, bang, because sometimes it's susceptible to a snap back. Okay, but this looks okay on the 4-hour chart because you've got your confluence there with your naked Forex setup. So you've got your confluence there with your big bullish engulfer on that support zone, right? So markets have a memory. Markets remember the last time we closed roughly around this area and it shot up. So you'll definitely get buyers in, like we saw on this daily candle at this area, because they remember what happened the last time we got there. Now, the difference is, for my personal setup, if this ends up being something like this, potentially, because again, we are counter trend, until this daily anchor is broken, we are still in a downtrending environment. You've got to look at, you know, if you're long on it, if it does close, then just remember that you are in a counter trend environment, and this could very easily continue to the downside. So for me with gold, even though this hourly looks not too bad, okay, yeah, it definitely looks bullish right now. If you get a breaking close on this 4-hour above that area, that would be added confirmation for me that possibly it wants to have a little rally to the upside and possibly test this downtrend anchor, possibly. I don't know what's going to happen in the future. I wish I did. I don't have a crystal ball. If I did, I'd be a billionaire. But maybe it does. Morningstar pattern on that 20. The 20 is curling up. As I said, breaking out that structure. There's an argument there for gold to the upside. Just be aware it is counter trend. Gold. What else do I like? Oil. I liked oil. Let me know if you want me to look at anything else. Oil is another one on my watch list that seemed to have just gone. But I'll go through it again because I think it's important for people that are new watching to get familiar with what I look at, and it does work, and the actual strategy working. Because if this was a 4-hour chart, right, I would be in this trade. But as we saw before, sometimes the fake outs happen on lower time frames. But we've got a cup with handle here. Nice accumulation period, channel corrective underneath that break. But not only that, in terms of our basing structure, we've got roughly around that 50% accumulation area. So what I mean by that, if you're new, is if we have a cup with handle, we want this handle, which remember, the most important part of the breakout is prior to the break, just prior to the break, to be roughly around 50% of this basing structure. Okay, the reason why I like that is it just digests this whole structure, as a whole. And this is what we got here. Again, we look at this bar, bullish engulfing bar, going through the 20. It's a good bullish indicator. And we've got a pullback, a tag of the area, a pullback, slight little fake, back to that 20, and then bang, off we go. Going with the trend. This is the power of going with the trend. Okay, look at the reaction here from a trending environment compared to New Zealand yen, which is a counter trend environment. Okay, so this is why the trend is your friend, because you can get reactions like this in context, good context, that go with that longer term trend. And the 4-hour, confluence in the 4-hour is we've had a nice move to the upside. We are correcting, but look where we are just prior to that break. So what is this? Anybody tell me what area is this? What are we breaking through there in terms of a corrective? Anybody tell me? Don, you should know. B wave. Breaking through B wave here. Look at the reaction. So That's why I really like B-Wave, and there's your another kind of confluence of going with that trend, because you've got a break of B-Wave, and look at the reaction. The reason why we sometimes get this reaction is because at B-Wave you expect a lot of stops to be here, because you've got sellers who are coming in on this downtrend, this let's say corrective, thinking we're moving down. And they're all stops are being liquidated. We're continuing with that trend. Sometimes you get a reaction like we've got now. So that's a good example of why I like B-Wave. But I'm not in that one again. A few of these I'm not in. Just I need a breakout retest on the smaller time frames. And finally, USD CAD. USD CAD is the last one I've got here, which seems to be having a slight fake. So again, in terms of breakouts, I don't take this break to the downside because of where we've come from. Right? We want to be, if we're taking breaks or taking movements, we want to take them at the start of the move, right, rather than at the end. So I'm not saying this can't move to the downside, but taking a breakout here can put you at risk of a potential pullback, potential fake out to the upside. So initially I was looking at this larger structure here, which is still on the cards if we do fake out. But I think this is probably gone now, USD CAD. The downside, let's see what happens with that DXY. Do I massively trust this? Not really, but let's see. So a few of them I had that unfortunately I didn't get. Okay, let's go through yours. Pound Aussie, Euro USD, and the DAX. The DAX. So let's go through Pound Aussie. Pound Aussie for Denise. Pound Aussie, I actually had on my list this morning, but it was very swiftly taken off because of that push in the pound. Here's your, the thing with Pound Aussie, right, is this doesn't look bad for movement to the upside. I don't know whether you're buying it or selling it, Denise. I presume with what's happening right now, you're looking at buying it. But in terms of corrective, this has kind of changed a little bit now on this particular bar to doesn't really look like a proper pullback to potentially the bend at the end of the trend, which supports of the SPX. Again, this is why you do your risk sentiment. It supports that SPX downside movement. You'd expect the Aussie to weaken off. The only issue is we're obviously approaching this area here. Possible slight accumulation period here. For me to take it to the upside, you need that confirmation of a break above. Ideally, it doesn't break now. Ideally, you get that reload. Possibly even let that 200 come. So your breakout, if you're taking a breakout on this zone, your breakout is above that 200. So if you do continue, you've got that as area of kind of dynamic support to your price. So Pound Aussie looks bullish. There's no doubt about it. It does look bullish, but you've still got to get through this level, right? Which has been respected a few times. So you've got to get through that level before you get out of the confirmation. But again, you've got that 200 in the way. So it is counter trend. I like the bias. Again, it's counter trend. You're always going to have some obstacles. We're coming from a daily move to the downside as well. But I mean, you zoom out and technically you're coming from here, right? It's just a little bit messy on the daily. But yeah, I agree with the bias. Potentially movement to the upside on Pound Aussie. Just wait for that confirmation. Euro USD, juice out. Euro USD. Oh. Euro USD. Oh, sorry, I just have to process it for a second before I give you my analysis because I've not looked at it. At the moment, looks not too bad if you're in this right now for longs. Slight little head and shoulders there, but again, we are counter trend. Could we be coming back to retest this area? Maybe. If price action starts to kind of do this, you might be a little bit worried about that retest because that's not a retest that I like to see. You know, you want to see your channel healthy retest. Right? Yeah, your healthy retest back, your complex corrective back to that area, roughly around that 20 to continue short. However, if you get some bullish momentum here, from what I've seen and from what I've back tested, sometimes that is not the best price action for continuation to the downside. That's what I'll say. I'm not saying that's going to happen yet. You're in for a sell at 15,158. 15,158. 15,158. Are you sure you got the right price there, Aiden? Or are you talking about? I'm not sure we're talking about Aiden. If you let me know a bit better, then I'll be able to help you. You are. Yeah. I mean, this is your decision point, right? Oh, sorry. Okay. Yeah, I'll do that. I'll do that next, Aiden. This is your decision point, right? This is where the market is going to tell you what it wants to do. So for me, yeah, it looks to be quite good getting up there. You've got your slight head and shoulders context, a breakthrough, nice price action, dollars coming off slightly. It would make sense for this to get up there. Now, again, if the DXY decides to respect that 50, this will come back down. Obviously, if the dollar gets strength, that will obviously come back down. We take this from the latest impulse, we're roughly around that 61.8. And this is why I talk about in terms of retest on that daily. It's not something I massively like to see. So yeah, if we break above that 61.8, you expect to get there, but this is your decision time because it's a big level. You know, this is a big level, 1.17 roughly area, something like that, which we've broken through. We're broken through decently. The US dollar has been strong. So yeah, you probably get a retest. Taking a short around that area makes sense, although I don't like the pullback. Put it that way. I took the buy from 1.16025. 1.16025. So roughly on break of this structure, right? 2.5 or a bit higher. So basically, you took the break or you took a buy here. 1.16. Sorry, let me just go. 1.16025. Okay, I've kind of got where you are. Stop loss trailed your stop to 1.1619. 1619, so somewhere here. Yeah, for me, I don't know what your risk management was just out, but let's say if you took that, for example, took this breakout and your stop's underneath here, I wouldn't be so quick to move your stop just yet. You know, maybe you get a slight pullback here, possibly, but you don't want to squeeze it too much. I'm not saying you are, but you don't want to squeeze it too much where if this does come back for a complex, because, you know, in terms of pullbacks, you get single leg and then multi-leg pullbacks. And this is what I use a 20 for to determine if that's going to be a single leg or multi-leg. If you squeeze it too hard and this comes back for a multi-leg pullback and you get caught out here before it continues to the upside is a little bit annoying, right? So even though, you know, protecting your money is number one, it's also, well, we have moved here. Is that enough of a pullback for continuation to the upside? But I get moving your stop because you want to protect your capital because it is counter trend. I get that. But I just think if you're thinking this is going to get up here, right? If that's what your bias is, giving that a little bit more room to move because you could see an ABC, right? These stops taken out if you're moving your stop quickly in continuation to the upside. Possibly. You know, even having your, where's your stop? 1.16196. Let me just get that. 161. So your stop's roughly here. So, I mean, for me, who's, sorry, just out, why don't you put your stop here? You know, you're giving it a little bit more room to breathe. You've got those moving averages on your side, right? If this is still, let's say, your break-even point, depending on what you want to do, I guess you're trailing it. But if that's still your break-even point, just give it a little bit of room. Give it a little bit of room. Because, you know, if you want this to move, if this is where you want it to be, you've got that dynamic support to price. And just, you've got to think about yourself. If you get stopped out here and it does this, would you be annoyed rather than taking the little bit of extra room, as long as this is not costing you a whole heap of money for movement to the upside? Now, again, this is completely up to you. Your trade management is up to you. I can't tell you what to do. I can just give you some tips from what I've experienced in the past. And an ABC is certainly something that happens a lot. I would just, maybe just give it a little bit of room if that's what you're thinking. But that's just my personal advice. I'm not telling you to do anything. You are in control of your account. DAX. Okay, Aiden, I'll do the DAX. DAX 40. Check the higher time frame. Yeah, I did just out. I checked the higher time frame. Okay, DAX for Aiden. Initially, you're looking short, right? It has to be short bias, unless you're buying at support. We had a nice hammer here. Look at this. This is why, unless you have a massive stop, this is why you don't take breakouts here. Look at that. Faked out, bang, movement to the upside, roughly back to that 20. It's okay when you look at it from a market structure point of view. Impulse correct, maybe we're doing the same thing. We've got a break underneath this hammered wick, which is a good sign for bearish, a bearish movement. So I don't know whether you're in for a sale at 15158. 15158. Okay, so somewhere roughly here. So you're selling it from that candle. Yeah, I mean that looks good. That looks quite good. Again, if you're taking some profit off or you're in profit, you know, you could be moving your stop to that anchor there. This actually looks not too bad. It doesn't look too bad. I don't want this to break out yet. If it does this, potential breakout retest to the downside. But yeah, I mean, yeah, I agree with that bias, Aiden. Roughly on that 200 on the daily, but if it does break underneath, you could be onto a decent trade. A breaking close underneath this area. A breaking close underneath this area would be a good sign because the market's failed to do that before. Right? It's tried it 1, 2, 3, 4, 5 times. If we break and close below here, yeah, I could see it. Yeah, I could see it being a decent sell. It just, yeah, I mean, your bias is right. Just wait for that confirmation, I'd say. What the hell is going on with gold? What is going on with gold? Anything going on with gold? Whoa. Oh yeah, that's kind of what you want to see. So a closure above this level, yeah, would look good for movement to the upside. It's on that 20 on the daily. Yeah. I mean, I mean, gold does this, right? Gold, when it gets momentum, gold can do this. You have to be aware of that commodity and what its personality is. And we know when gold has momentum, it has momentum. So if you're looking at this in the 4 hour, yeah, looks not too bad. But just be aware that this is on a downtrend. You have to be aware of the technicals and what you're seeing with the market, and not get too like, oh God, gold's moving up, I've got to buy it now. You certainly don't want to be buying gold right now, do you? Why would you buy it there? You want to buy on a pullback, or in terms of a longer time frame play. Yeah, you could take that 4 hour and put your stop underneath here, but you still want to wait for a slight little pullback on these smaller time frames because massively extended, massively. Look at that. But yeah, of the content and learned. Oh, thanks, mate. Appreciate that. Okay, what was the last one? I'll do one more. CAD Swiss. Where have I got CAD Swiss? Okay, CAD Swiss, and I'll do that, and then I'll be done for today. I will put out. I'm filming a gold and silver analysis. I'll go into a bit more detail after I do this, which A1 will put on their stream. So have a look out for that, where I'll take it after this move basically and do a bit more in-depth analysis. Okay, CAD Swiss. What was your trade? You're buying at 0.73405. 0.73405. So you're basically just buying it. 73405 is somewhere here. Okay. Yeah, I like the daily. Who asked me about this? Ashwin. I like the daily. I like the daily that we're breaking out from here. Actually, I had a buy on this pair that was looking good and then stopped me out. But typically, it then comes up for a V reversal and is looking quite good. So we've broken out of this anchor. Decent bar yesterday, above those moving averages. The daily context says to me, buy the CAD Swiss. The SPX is not saying that. but the technicals are telling me buy Swiss or buy the CAD Swiss because it's on an uptrend. However, in saying that, I'm not particularly fond of this. You're possibly getting that loss of momentum, maybe that head and shoulders up here. This is price action that I don't like. So maybe you could be in for a harder reset before continuation to the upside. So again, that impulse, loss of momentum, harder reset, continuation to the upside. Just looking at price action here on the 4 hour, I don't mean to scare you, Ashwin, but and this is not saying that I'm going to be right at all. I don't know what's going to happen in the future. That's really important to note. And if your strategy says buy it, then buy it. And so I'm just giving my opinions. But this price action isn't very nice. Looks like a slight, as I said, a slight loss of momentum where maybe it needs a little bit of a refresh, a little bit of a harder pullback before continuation to the upside. So even though the hourly looks okay, right? This looks okay. As I said, yeah, intraday, there's a bias there for movement to the upside. I think confirmation of that would be a break above this area here. Certainly a break above this, but probably more so a break above this area. But if your stop's down here, it fits your strategy, then yeah, absolutely. CAD Swiss looks good, certainly from the daily perspective. Just be a bit wary of this 4 hour. That's all I would say from my personal experience. But maybe I'm completely wrong. Like I said, I don't have a crystal ball. I wish I did. I'd be on a yacht. I probably wouldn't be streaming here. I'd be on a yacht if I had my crystal ball. But I'm just trying to give you potentially of what could happen. So no problem, mate. No problem. All right, everybody. I appreciate you coming. And remember, if you liked like the video, helps the A1 trading channel out. I will put the gold, or A1 will put up the gold and silver video up later. But if not, remember to trade safe. Thanks, guys. Take care. Peace.
Hey guys, thanks for tuning in to today's stream. I hope you enjoyed that. Make sure to follow today's guest, by the way, on social media. And don't forget to subscribe to A1 Trading here on YouTube for more market coverage, trade ideas, and special guests. Our streams are made possible thanks to our sponsors, all of which can be found down below in the description. If you're looking for a new broker, consider checking out the links down below. We've partnered with a few brokers that we think you should check out. By signing up with one of these brokers, our company will receive a small affiliate commission, which does help us stay here on the air creating free stuff for you guys. Thanks again for tuning in, and we'll see you back in the next.